Bloomberg Audio Studios. Podcasts, radio, news.
Last year, Atlas Merchant Capital sponsored an $888 million merger involving Sonnet Therapeutics to create hyper-liquid strategies, a digital asset treasury company centered on the HYPE token. For more on this, we're joined by Bob Diamond. Bob is the current CEO of Atlas Merchant Capital. He is the former CEO of Barclays. Bob, thanks so much for coming in on our 1 hour launch of Bloomberg Crypto. I want to start big picture before we get into hyper-liquid. How would you characterize the current environment for risk, given how much sentiment and momentum on crypto has really shifted since last October?
Well, I think over the last week or two, we've certainly seen deleveraging and probably a little bit of a risk-off trade. I think it's one of the reasons why we're so excited about hyperliquid, which I always try and simplify things a little bit, Scarlett, but if you think about Bitcoin and the volatility of Bitcoin, it's really a store of value. And the price is really much more about supply and demand. It can be quite volatile. Where hyperliquid is a layer one blockchain. It's a blockchain that was built for exchanges to be on top of it and execute on top of it. And I think of HYPE, the native token, as more similar to equity in a company. So it's much more valued based on the price earnings, based on the volumes. And as we see HYPE be traded on hyperliquid, but now Trade XYZ, which is a platform, a part of Unit, through HIP3, they're able to go in on hyperliquid and build an exchange, and they're trading the NASDAQ. They're trading SpaceX, they're trading Tesla. And just recently, they've been trading silver and gold, metals. So we're seeing for the first time, real application of real world assets coming onto an exchange. And I think this is a sea change, but the volatility we've seen in things that are supply and demand driven, stores of value, is very, very different than hyperliquid, which is really a business.
We've heard a lot in recent years about the idea of real world assets being tokenized in trading. But I think there are still a lot of people out there who are unconvinced that this is a problem that needs solving. Convince them right now.
Well, silver has been trading on hyperliquid for about 2 or 3 weeks. Last Friday was the single largest day for volume of silver trading, I think as far back as you can go in history. And Trade XYZ on hyperliquid was 2% of the volume. I think if nothing can say, we actually have real world assets on this exchange. Hyperliquid is doing it. Now, over the last 7 days, Bitcoin's down about 12%, Ethereum's down about 20%, and HYPE, the native token, is up 40%. Think about those numbers, down 12%, down 20%, up 40%. It's because the volumes have been growing, revenue has been growing. Last year, revenue was just under $1 billion. There's 11 employees. This is a real business, and for the first time, we're seeing real world assets come on chain.
What kind of adoption do you see from TradFi, from traditional Wall Street onto the hyperliquid platform right now? Because they have a lot of concerns around know your customer and anti-money laundering, and these are things that don't get solved quickly.
I can't even say TradFi very well. I say traditional finance. I'm so traditional finance, so TradFi, I'm trying to work on it, Scarlett. I think is some of the people were saying when you did those clips, the institutional adoption is real. We were an early investor. You had Jeremy Allaire on there. We're an early investor in Circle. That's infrastructure. That's stable coins. That's blockchain. These are things that real bankers or traditional bankers can really understand. And I think today, all major banks, JP Morgan, Bank of America, Bank of New York, State Street, Barclays, they're all investing in blockchain. They all have use cases for blockchain. So one thing we're seeing for sure is the infrastructure is very much adopting blockchain as in my own view, over the next 5 to 10 years, we'll see blockchain emerge as probably the most prevalent infrastructure really in finance writ large. We just spoke to Mike Novogratz over at Galaxy Digital, and he regrets not getting into the prediction markets game sooner with investments in the big players. The upgrade to Hyperliquid will allow support for prediction markets.
How do you compete with the call sheets and the poly markets out there? What gives you the edge?
So first of all, thank you for asking that. HIP-3, we've been bringing equities on, metals on. HIP-4, we're doing some more changes in the technology so we can bring prediction markets on. Literally in the next couple of weeks, they'll be on Hyperliquid. And I think what we've seen is that Hyperliquid is fast. Hyperliquid has deep liquidity. And Hyperliquid is on-chain. And those things mean that it's going to compete. Just as we've seen, 3 weeks of having silver on trade XYZ, it's already competing.
I want to just end on one more digital asset treasury type of question here. It's the ticker PER, that's the ticker for your firm. It's been trading below net asset value. So what's driving that, and under what circumstances would you actually consider selling HYPE?
So I don't think it's under net asset value. We have earnings next week, so we'll go through so that we can be more public on what the net asset value is, so people can trade it back and forth. Yeah, I don't think your calculation's right.
Okay, we'll have to go back and look at that. Just one more on that. Is part of the value?
Well, listen, to be fair, I didn't really answer your question. I think we announced publicly a few weeks ago that when it was below net asset value early on, we had approval from the board to buy up to 30 million of shares. I don't think we've reported back on that to the market, but next Tuesday is our first earnings, so we'll be talking about that then.
We'll wait to hear on that. Very briefly, is the value proposition for PER to give access to a wider audience and a wider user base?
So I think there's two value propositions. Value proposition one, and this is really, really critical, Tim, is this is a business creating revenues. The volumes are exploding, and they're exploding in a very substantive way. We're going into new markets. We're actually getting real-world assets through HIP-3, through Unit and Trade XYZ on-chain. We now have a native token, which is USDH. So there's a lot of things that are building this business and increasing revenue. And so the first valuation of HYPE is it has all the characteristics of a share buyback, because 97% of the income that's produced within Hyperliquid is used to buy back those tokens. So think of that as very, very similar to a share buyback. That's number one and number two. Now, number three, what we're doing with our DAT, and I think it is different. Everyone says it's different. But we're giving access to a lot of U.S. investors who are not yet approved for perpetual futures to get access to HYPE and to Hyperliquid. And I think that's the third value proposition.
Bob, thank you so much. Bob Diamond is Atlas Merchant Capital CEO, but you may also remember him as a former CEO of Barclays.